Welcome everyone, and thank you for joining me today. I'm excited to introduce our presentation titled Comprehensive Guide to Business Central Data Corrections. On this first slide, you'll see the main title along with the subtitle, Ensuring Accurate Financial Management and Operational Integrity. Over the course of this session, we'll explore key strategies and best practices to help you manage data corrections effectively within Business Central. We'll cover everything from identifying discrepancies to implementing precise adjustments, all aimed at supporting your financial accuracy and operational reliability. Let's get started. Welcome to the second part of our guide, where we'll introduce you to Business Central corrections. These corrections are essential for maintaining accurate financial reporting, ensuring compliance, and keeping your business running smoothly. When we talk about fixing journal entries and sales invoices, we're referring to the common adjustments that help correct any errors that might occur during data entry or processing. Adjusting posting dates is another key correction, which is often necessary to reflect the true timing of transactions. Business Central offers powerful tools that make managing and correcting your data straightforward and efficient. This not only saves time, but also helps you stay compliant and confident in your financial data. Overall, these correction processes are vital for keeping your business operations accurate and reliable, which ties into the broader goal of effective data management and operational excellence. In this slide, we're focusing on assigning users with posting date ranges, which is a crucial part of managing data accuracy in Business Central. This control essentially determines who can post in which periods, helping us maintain data integrity across the organization. It's a way to ensure that transactions are recorded in the correct time frames, avoiding errors and backdating issues. The purpose of this posting date control is to give us flexibility. We allow accounting users to override posting dates in their user setup, so they can make adjustments if needed. This is especially useful during month-end closing or when corrections are necessary, enabling specific users to post in restricted periods without compromising overall data consistency. Now, the next step is to configure the user setup for accounting. This involves changing the company-wide posting date in the general ledger setup. Doing this aligns the posting dates with what our organization needs, ensuring everyone is working within the correct time frames. And finally, to give you a practical example, imagine Contoso Electronics is closing their books for April 2025. The sales and operations team should only post transactions starting from May onwards to prevent backdating into April. However, the accounting team still needs access to post in April for month-end adjustments. This scenario highlights how these controls help balance operational flexibility with data accuracy. So, in summary, assigning users with posting date ranges is about controlling who can post when, maintaining data integrity, and supporting accurate financial reporting across the organization. Now, let's take a closer look at the setup for posting dates in the general ledger. This setup is crucial because it helps us find the right balance between control and flexibility. You see, during period closing, having the ability to adjust and control posting dates becomes especially important to ensure accuracy and compliance. One key feature is in the user setup, where we can enable specific users, such as members of the accounting team, to override the company-wide posting dates. This gives certain users the flexibility they need to handle exceptional cases without compromising the overall control system. To implement this, we navigate to the general ledger setup. From there, we update the company-wide posting date range to match the new month we're working with. This ensures that all transactions are within the correct timeframe, making our period closing smoother and more accurate. By managing these settings carefully, we maintain both control over our data and the flexibility necessary for efficient operations. Now, let's take a look at the rules for posting dates in user setup. This is a crucial part of ensuring data accuracy and security in Business Central. First, the allow posting to date in user setup must always be the same as or later than the date set in the general ledger setup. This helps prevent users from posting transactions to periods that are outside the approved range. Next, the allow posting from date in user setup should be the same as or earlier than the general ledger setup date. This ensures users can't post before the start date established in the ledger settings. It's also very important that both allow posting from and allow posting to fields are filled in. Leaving either blank could lead to posting errors or unauthorized backdating. By following these simple rules, we help maintain consistency, prevent errors, and uphold control over our financial data. These safeguards are key to keeping our accounting processes accurate and secure. Now, let's move on to the next step, posting the corrected journal entry. This is a crucial part because it ensures that our expense classifications are accurate and that our financial statements truly reflect the company's financial position. Once you've created your new journal entry, you'll need to post it to update the ledger accordingly. To create the corrected journal entry, you'll debit the office supplies account with $2,000 and credit the cash or bank account with the same amount. This corrects the previous mistake and properly records the expense. Next, it's important to reverse the incorrect transaction. You can do this by navigating to Process, then selecting Reverse Transaction and posting the reversal. This step removes the erroneous entry from the ledger, preventing any confusion or misstatement. Finally, to verify the correction, search your general ledger entries for the $2,000 rent expense entry. This helps you confirm that the incorrect entry has been identified and properly addressed. By following these steps, you ensure your data remains accurate and your financial reports are reliable. Now, let's look at how to correct dimensions on posted transactions. This step is crucial because it ensures our data remains accurate without affecting the audit trail. You have the option to run the correction immediately or schedule it for later, depending on your workflow. When you execute or schedule the correction, the system updates the dimension data without reviewing the transactions themselves, which helps maintain the integrity of your audit records. To do this, you'll assign the correct department code, such as sales, and then proceed to assign the correct dimensions. Simply click on Correct Dimensions to initiate this process. Next, you'll search for the general ledger entries. This helps you find all the affected posted transactions. Then, you select all those transactions that need correction. It's important to identify and select only the affected entries to ensure the corrections are accurate and efficient. This process helps us keep our financial data precise and consistent, supporting our overall goal of maintaining reliable and trustworthy information in Business Central. Now, let's look at the final steps in correcting a posted sales invoice. It's important to remember that after making your adjustments, you need to post both the credit memo and the corrected invoice. This ensures your records stay accurate and up to date. First, you'll want to find the original invoice, like PS-INV103215, to start the correction process. Once you've located it, you can proceed to generate the necessary documents. You'll use the Correct option to create a credit memo for the incorrect amount, in this case, $10,000, and then generate a new draft invoice. Next, you'll edit this draft invoice to reflect the correct details. For example, adjusting the quantity to 8 laptops, which totals $8,000. This step ensures that your invoice accurately represents the sale. Finally, after confirming all the details are correct, you'll post both the credit memo and the new invoice. Doing this maintains the integrity of your financial records and keeps everything aligned with your actual sales data. Remember, these steps are crucial for accurate bookkeeping and seamless business operations. Now that we've identified the correct payment application, the next crucial step is to post the corrected application. This action is essential because it ensures that the customer accounts and receivables are accurate and up to date. Without posting, the corrections won't reflect in the system, which can lead to discrepancies later on. Once posted, it's important to finalize the correction process. This involves reopening the payment and applying it to the correct invoice, in this case, PS-INV103218. Reopening the payment allows us to update its allocation properly, ensuring the invoice is accurately credited. If the payment was initially applied to the wrong invoice, we need to reapply it correctly. To do this, we first unapply the incorrect payment. You can do this by navigating to Process and selecting Unapply Entries. This step removes the current, incorrect application, clearing the way for a proper reallocation. The final step is to locate the payment in the customer ledger entries. Finding the payment is key because it allows us to verify the details and confirm we're working with the right transaction. Once located, we can reapply the payment correctly, ensuring that the customer's account reflects the accurate payment application. This process might seem detailed, but each step is vital for maintaining precise and trustworthy financial records, which overall supports the health and accuracy of your business's data. Now, let's look at how to manually adjust sales order tax amounts. This is important when you notice small discrepancies, like the 50 cents difference we see here. To correct this, you'll want to edit the tax amount directly on the sales order. First, navigate to the Order menu, then go to Statistics, and select Number of Tax Lines. This will allow you to review the detailed tax information associated with the sales order. Once you've reviewed the details, locate and open the specific sales order, for example, SORD 1010014. Opening the order is the first step towards making any adjustments. Next, ensure that the Tax Difference Allowance feature is activated in the Sales and Receivables setup. This feature is what enables you to make these manual adjustments without issues. Finally, check the General Ledger setup to set the maximum tax difference allowed. This ensures that small discrepancies, like minor rounding issues, are within an acceptable range and don't trigger unnecessary alerts. By understanding these steps, you can confidently manage and correct minor tax discrepancies directly within Business Central, keeping your data accurate and compliant. Now, let's look at how to finalize and post a consolidated credit memo for multiple sales invoices. First, we need to ensure we complete the process by finalizing and posting the $8,000 credit memo. Doing this correctly allows us to efficiently handle bulk returns or rebates, saving time and reducing errors. Once we've reviewed everything, we can post the consolidated credit memo to update our records accurately. Next, it's important to verify the selected invoices before posting. We want to make sure all the details, including invoice numbers and amounts, are correct. Double-checking helps us avoid any discrepancies later on. After confirming the accuracy, we review and confirm the credit memo. To do this, we navigate to the Prepare menu and select Get Posted Document Lines. From there, we choose the 5 invoices associated with the return, ensuring we've included all relevant transactions. Then, we select the invoices we want to reverse. Finally, we initiate a new sales credit memo specifically for the customer, in this case, ReCloud. Creating a new sales credit memo allows us to properly document the return process and keep our records clean and organized. This step ties everything together, making sure our data corrections are accurate and efficient, all while supporting our overall business management strategy. All right, now let's talk about how to correct customer refunds. The first step is to contact ReCloud to arrange for the repayment or to adjust their account accordingly. It's important to coordinate with them directly so we can handle the corrections smoothly. Next, if we need to fix the mistake, we should undo the refund transaction. This means reviewing the original refund to ensure our records are accurate. To do that, we need to locate the specific refund. In this case, the $900 refund issued to ReCloud in the bank account ledger entries. Finding this transaction is crucial because it's the foundation for making the necessary corrections. By following these steps, we ensure our data remains precise and our customer accounts are properly adjusted. Let's take a closer look at fixing credit limit warning overrides. This slide is part of our comprehensive guide to data corrections in Business Central. As you can see, managing credit risk effectively while still maintaining operational flexibility is key. One of the ways we do this is by splitting large invoices into multiple deliveries, which helps us stay within credit limits without halting business processes. The system is designed to alert us when a credit limit is exceeded, but it doesn't automatically block the transaction from posting. For example, in this scenario, a $15,000 invoice was posted to Prosware Limited, even though their credit limit was only $10,000. This highlights the importance of understanding system behavior. Warnings are there to inform us, but the final decision and control rely on how we manage overrides and approvals. Overall, this approach allows us to balance risk management with operational needs, ensuring we don't disrupt cash flow while keeping credit exposure in check. Now let's look at how to reverse duplicate bank deposits effectively. Once you've identified the duplicate, the next crucial step is to post the reversal to correct the ledger. This step is vital because it prevents overstated cash balances, which can lead to inaccuracies in your financial statements. By posting the reversal, you ensure that your bank accounts are accurately reconciled. To do this, you'll go to Process, then select Reverse Transaction, which will generate the necessary reversal entry. The key is to find one of those duplicate deposits in the bank account ledger entries. Once you've located it, you can initiate the reversal process. Remember, this method helps maintain data integrity and keeps your financial records precise. So, always verify the duplicate deposit carefully before posting the reversal, and you'll keep your ledger clean and accurate. Now that we've identified the need to correct the vendor invoice, the next step is to finalize and post the corrected invoice. It's essential to ensure that the expenses are categorized accurately and that the vendor's accounting records are correct. This helps maintain clean financial data and simplifies future reporting. When posting the corrected invoice, remember to include the credit memo with the suffix B on the new invoice. For example, if your original invoice was INV0012, the corrected one should be INV0012B. This clearly indicates that it's a correction linked to a previous transaction. Before doing that, you'll want to reference the credit memo. Generating a new invoice for the correct amount, say $12,000, and making sure to use the appropriate account, like the software licenses account, is crucial. This ensures the expense is properly allocated. To create the new invoice, simply click the Correct button to post the credit memo. This step reverses the incorrect posting that was made to consulting services, effectively correcting the record. Next, you'll need to locate the original invoice. Search for the posted purchase invoices and find the one for Fabricam, Inc. That totals $12,000. Opening this invoice allows you to verify the details and ensure everything has been properly corrected. By following these steps, you ensure that your vendor invoice postings are accurate, complete, and aligned with your overall data management strategy. Now, let's walk through the process of returning items to vendors using credit memos. This is part of our comprehensive guide to making data corrections in Business Central. First, you start by creating a new purchase credit memo. This is the initial step to document the return. Next, you enter the vendor invoice number and then post the credit memo. Doing this ensures that the return is properly recorded and the vendor balances are updated correctly. Then, you'll want to reference the original invoice. To do this, enter the vendor's name and use the Prepare menu to copy documents. Select the original invoice, which in this case includes 7 laptops, to keep everything linked accurately. After referencing the original invoice, you'll need to adjust the quantity. Reduce it to 6, or just 1 less than the original, to reflect the returned item. Finally, you proceed to finalize and post the credit memo. Make sure all the details are correct before posting to ensure the vendor balances are properly adjusted. This process helps us manage returns smoothly and keeps our vendor accounts accurate and up to date. Now, let's look at how we can update the number series for purchase invoices to prevent posting errors. This slide provides a comprehensive guide to handling data corrections in Business Central, specifically focusing on maintaining proper invoice sequencing. First, the key idea here is that resolving these issues helps ensure your invoices are posted smoothly without errors, and it keeps the numbering in a proper sequence. This is crucial because inconsistent numbering can cause confusion and disrupt your record keeping. To resolve and maintain the number series, you start by selecting the relevant series you want to edit. You have two options. Either update the ending no to a higher number, which effectively extends the sequence, or leave it blank if you want Business Central to automatically handle the incrementing for you. Next, you navigate to the No series page within Business Central. This is where all the numbering sequences are managed and where you can make the necessary adjustments. Finally, it's important to recognize that errors often happen during the posting of purchase invoices when the number series isn't aligned properly. Identifying these issues early and correcting the number series helps prevent future posting errors and keeps your invoicing process running smoothly. Let's take a closer look at how to correct inventory increases that have been posted at zero cost. This slide outlines a comprehensive process within Business Central for making these data corrections effectively. First, it's important to only use this process if the original posting was an error. Before making any adjustments, double-check that the items haven't been sold yet, as we want to avoid impacting sales or inventory already committed to customers. Now, a key point to remember is to post a positive adjustment for the same quantity at the correct cost. Why? Because this step ensures that our inventory valuation and financial reports stay accurate. In the first solution step, we need to reverse the mistake. We do this by posting a negative adjustment of the same quantity, but at a zero cost. This effectively reverses the original erroneous posting. Following that, in the second step, we correct the cost by posting a positive adjustment for the same quantity, but at the correct cost. This ensures our inventory values are accurate and our financial data reflects reality. It's crucial to understand that when the quantity increased but the cost was posted as zero, it led to undervaluing the cost of goods sold when these items are eventually sold. This can distort our inventory valuation reports and give a misleading picture of profitability. By applying this process, we prevent those inaccuracies, keeping our inventory data reliable and our financial statements correct. Remember, these corrections are essential for maintaining trust in our reported numbers and making informed business decisions. Let's talk about some best practices for reconciliation to keep our data accurate and reliable. First, it's essential to regularly review the chart of accounts using filters. This helps us spot any inconsistencies early on. Next, we should run key financial reports like the profit and loss and balance sheet. These reports give us a clear picture of our financial health and help verify that our data is correct. It's also crucial to match our subledgers, such as accounts receivable and accounts payable, with the general ledger. This ensures all the detailed transactions align with the overall ledger. Pay special attention to bank accounts and aged receivables or payables reports, as discrepancies often surface there. By following these steps consistently, we can detect discrepancies early, which is vital for maintaining the integrity of our financial data. When we stay proactive with these practices, it helps us avoid bigger issues down the line and keeps our financial reporting trustworthy. Let's talk about the importance of reconciling checkbooks and subledgers both daily and monthly. Consistent reconciliation is key to preventing errors and ensuring we meet our financial closing deadlines smoothly. When we regularly compare our bank statements to our checkbooks, we catch discrepancies early, which keeps our records accurate. Adjusting posting date ranges each month to match our accounting periods is another essential step. This helps us maintain consistency across our financial data and ensures everything aligns correctly for reporting. Performing monthly reconciliation of subledgers with the general ledger is also crucial. It confirms that all detailed transactions are properly reflected in our main financial records, reducing the risk of overlooked errors. And of course, reconciling checkbooks daily by comparing bank accounts to our chart of accounts keeps our cash balances accurate and up to date. This daily check helps us stay on top of cash flow and detect issues promptly. Overall, these practices form the backbone of reliable financial management and help us close our books efficiently each period. Now, let's talk about creating company backups and managing fiscal years effectively. First, it's essential to create backup copies of your company before closing any periods. You can do this easily through the company's menu by selecting Copy. This step is crucial because it ensures you have a safe restore point if anything unexpected happens. Next, setting up multiple fiscal years in the accounting periods is a best practice. This allows you to keep both the current and previous years open at the same time. Why is this important? Well, it gives you the flexibility to make adjustments in prior periods without disrupting your ongoing transactions in the new fiscal year. By enabling adjustments in previous periods, you can correct errors or update data without compromising the integrity of your current period data. This approach helps maintain accurate financial records and simplifies your year-end closing process. Finally, these practices, creating backups, setting up multiple fiscal years, and enabling adjustments, are all about safeguarding your data. They make the year-end procedures smoother and help ensure your financial information remains accurate and reliable throughout the year. Now, let's look at handling sales orders and shipments within Business Central. One important aspect is consolidating credit memos, especially when you're issuing bulk returns or rebates. By grouping multiple credit memos together, you can simplify customer account management and make the process more efficient. Next, when corrections are needed, say there's a mistake in quantity or pricing on a posted invoice, you should use the correction function. This allows you to generate credit memos and draft the corrected invoices, ensuring your records stay accurate and up to date. Tracking shipment status is another key point. You want to confirm that items are shipped as ordered before invoicing. This helps prevent billing errors and ensures your customers receive what they expect on time. Managing tax discrepancies is also crucial. Sometimes, there are differences in tax calculations between the system and the actual transaction. In such cases, you can manually adjust the tax amounts by setting allowed tax difference limits in the general ledger and sales and receivables setup. This keeps your financials aligned and compliant. Finally, creating accurate sales orders is fundamental. Always ensure that customer details, item information, quantities, and pricing are correct from the start. This helps streamline the entire order-to-invoice process and reduces the need for corrections later on. Together, these practices help maintain clean, accurate, and efficient sales and shipment processes, which are essential for smooth business operations and excellent customer service. Let's talk about monitoring credit limit warnings. The system will alert us when a customer's credit limit is exceeded, so we can stay on top of potential risks. Sometimes, manual intervention is necessary, such as splitting invoices or adjusting credit limits to better manage credit risk. Next, handling customer refunds requires careful attention. If a refund transaction was processed incorrectly, reviewing it correctly is crucial. We also need to coordinate any repayment or account adjustments to resolve discrepancies and keep accounts accurate. When it comes to correcting posted sales invoices, issuing credit memos is an effective way to adjust errors. If needed, we can re-invoice with the correct quantities or amounts to ensure everything is accurate and up to date. Reviewing ledger entries regularly is vital. This helps verify that payments are applied correctly to invoices. If a payment was applied to the wrong invoice, we need to unapply it and reapply it properly to avoid discrepancies. Finally, customer ledger entries are at the heart of tracking payments, invoices, and adjustments. Maintaining accurate ledger entries is key to reliable accounts receivable reporting and, ultimately, to ensuring customer satisfaction. All these points tie back to our overall goal of maintaining precise and trustworthy financial data in Business Central. Now, let's discuss how to use general ledger entries effectively. These practices are essential for maintaining the integrity of your financial data and ensuring your reports are accurate. First, managing posting date ranges is crucial. By assigning different posting permissions to users, you can control who can post in closed periods versus current periods, especially during month-end closing. This helps prevent accidental or unauthorized changes that could impact your financial statements. Next, Adjusting dimensions on posted transactions allows you to reflect correct departmental allocations without reviewing the original entries. This keeps your data clean and accurate without unnecessary reversals. When errors do occur, the best approach is to reverse the incorrect journal entries and then post new ones with the correct accounts and amounts. For example, if you need to reclassify expenses from rent to office supplies, reviewing and reposting ensures your records are precise. Finally, it's important to regularly review your GL entries. This means searching for and analyzing your entries to identify any posting errors or missing dimensions, like department codes. Regular reviews help catch issues early and maintain the overall quality and reliability of your financial data. All these practices work together to support accurate, trustworthy financial reporting. Now, let's focus on some key aspects of purchasing and payables management. First, it's crucial to promptly reverse any duplicate bank deposits or incorrect vendor payments. Doing this quickly helps us maintain accurate cash flow and vendor balances, which is vital for healthy financial management. Next, we want to ensure our financial records are precise by reviewing incorrect transactions when needed. This keeps our data clean and reliable for reporting and decision-making. Another important point is updating our number series settings to fix any invoice numbering issues. You can do this by adjusting the ending number or leaving it blank to let the system continue automatically. This helps us avoid gaps or duplicates in our invoice sequences. When it comes to handling returns, creating purchase credit memos that reference the original invoices is essential. You can also adjust quantities as needed when returning items to vendors, ensuring everything is accurately reflected in our records. Finally, always confirm that the account coding on posted purchase invoices is correct. If there are errors, use the correction functions to post credit memos or re-enter invoices with the proper account codes. This way, our financial data stays accurate and consistent across the system. These steps are all about maintaining control and accuracy in our purchasing and payables processes, which ultimately supports the overall health of our business. Let's wrap up by reviewing the key correction workflows we've discussed and how they fit into our overall data management strategy. First, handling customer payment applications and refunds is crucial for keeping our receivables accurate. This process ensures that customer payments are properly applied and any refunds are correctly recorded, helping us maintain a clear picture of our cash flow. Next, managing sales invoice corrections involves using credit memos and re-invoicing to accurately reflect the true sales figures. This step is essential for ensuring our revenue data is precise and trustworthy. We also talked about adjusting dimensions on posted transactions. This allows us to correct departmental or project-specific details, which is vital for accurate reporting and analysis across different parts of our organization. In addition, correcting general ledger entries through reversal and reposting helps us fix any errors in our accounting records, ensuring our financial data remains reliable and compliant. Finally, assigning user posting date ranges gives us flexibility during period closing. It helps us control when transactions are posted, balancing operational needs with the accuracy of our period reports. Throughout this presentation, we've emphasized how these workflows support data integrity, compliance, and operational efficiency. By mastering these correction processes, we can confidently maintain accurate and trustworthy financial data across Business Central.